Hello, folks. Man, what a day. It's time for the reversal pattern of the day. We didn't have any. Thanks for watching. Bye. No, just joking. I want to talk for a minute. I want to talk a little bit about ES or NQ, whichever one. I already got ES marked up. These are all my lines I had on the chart going into the day, 4 hour highs, regular trading hour highs. And I had one down here that doesn't show up in the 1 minute time frame. I think if you put it on a 5 minute, then you can see it. I don't know why it doesn't show up, but it was a monthly low down here, or maybe a 4 hour regular trading hour. If we go to regular trading hours only, I had this one marked out, and I thought once ES gets to this monthly low, we're going to get a reaction. So I was watching at 5 p.m. when we opened last night. This is the London, and I already moved the lines for the open at 6. I can put them back on there. Let's see here. 6 p.m. Where would the 6 p.m. be? There it is. 6 p.m. candle is right there. And I'll just go ahead and mark the green lines on it right here. Yes. So we can see how did price, because I've noticed when you do the London Open and you do the Asia Open, that first candle right there, it reacts just like it does the opening candle for New York. So we come, meander around a minute. We pull away with a fair value gap. We come down and we take that monthly low, push a little lower, all the way down to 67.52 and wick it out, pull away with a fair value gap, come back down, test it. And that's the lowest we got all freaking day. Now, if you weren't quite convinced here, when we come back up and then we don't even make it to the low of that opening range candle, that could be your entry right there, or here. But we've taken out a major time frame level, and you could leave that run all day. I actually had my take profit sitting. I think I just picked in the middle of these two. I put it right here at 6,900 right there, and just left it run. Now you would think because I had all of these levels marked out that I had a pretty dadgum good day, huh? Wouldn't you think that? Well, I should have, but I didn't, and that's one of the things I want to talk to you about. I went to work and I came in at London and I marked out that same candle right here. This little 1 minute candle. I think this is it for London. 3 3 a.m. candle is actually all the way down to here. Is that right? Yeah, that's a 3 a.m. candle right there. There's the low, there's the high. We bounced around and then we went up. But I was actually looking at a different one, I think. I don't know. Maybe I was looking at the pre market candle. But either way, I had that line in the wrong place. I had it way up here. Maybe is that the three? Yeah, that's the 3 a.m. candle, this little green one. And it kept dipping down below. And I was like, well, if it hangs out here, it's probably not going to be any good. But we did go and take this liquidity. And then so I got in right at the top of this line here. I should have waited here, but I'd gotten in here. And then so it was going against me. And I was like, you know what? I've already made some money. I'm not going to risk losing it if we don't go up there, because we could pull back. We could go retest, come all the way back down here to the breaker. But so I killed it right there for a minimal profit. And then I wasn't able to trade this morning when the market opened. So I missed a lot of this movement, but we can look at that. I missed all of it. I missed all of that movement. But look at that New York open. We'll go back to regular trading hours. Don't even push through the low of the opening range candle. We rip higher. That's the only retest of that fair value gap, and we did not look back all day long. Went all the way to Friday's high, or yesterday's high. That was a beautiful up move, directional day, and This is something that you need to keep in mind because I did not keep it in mind. I was able to trade the afternoon session, and guess where I got long? As soon as we took that high and started pushing higher, I got long. And guess what happened? I got stopped out and became convinced that we were going lower. This is a reversal pattern. We got to come and sweep these lows, I thought. So I got short, I got stopped out again. So all that profit I made from the bottom up to there, I pretty much eroded all of it right here in this little section. Bad idea. When you have good levels on your chart, like this monthly low, take your trade, put your stop below the low, and leave that sucker. There is no reason we should return back to that monthly level. And if it does, you lost the trade. Big deal. You lost one trade. It cost you $100 or $50 or whatever your stop loss was. Down here, all I would have had to have was $100 to get below the low. Right here. So let's say we pull away with this fair value gap right here. We test it and we start running here. I'm entering somewhere in this area. To get to the low, so I'll say I enter right there at that fair value gap. To get to the low, that's 30 points. That would be on one, be like 110, no, 100, $150, $150 right there. You know how much I eroded in this mess? $280. So I risk 150 down here and potentially make 800 or $1,000 because I would be adding somewhere along this way. If I'm up that far, I would be adding on some of these pullbacks. I would have added right here at the New York Open. So would it be better to risk 150 at the bottom than risk anything in this mess? Yes, it would be. I should have held that trade till the cows came home, and I didn't. And that's fear. That's called a fear and greed cycle. You think you're making logical decisions because you're trying to protect your P&L. So you'll have a really tight stop loss, or you'll move your stop to break even just as soon as the position starts going your way. That happens. And then the other side, the greed part, is maybe you get in like here, for example. You've made your money, everything's looking good, and then you get a reversal pattern, something that looks like a reversal pattern or something like here. Oh yeah, we're going to go take those lows. There's no doubt about it. And instead of taking your normal position size, you size up. Maybe I usually trade 1 micro. I'm going to put on 3 this time because this dude's about to rip. And you get spanked. Maybe you even put on more risk and you get spanked hard. But that's the fear and greed cycle. And you think you're making logical decisions, but you're not. You're trading on emotion at that point. Down here, this was a logical decision. I waited for this pullback because I know it typically does pull back. And then I joined the position. I should have left it alone. Even risking $100 on that, getting below the breaker, risking $100 and just letting it run, taking that one trade, go as long as you can. It is a little scary when you're sleeping and you're letting your trade run, but these levels were definitely significant levels that were going to be taken. At least that one right there. And we're not even to New York Open yet. Now, I might have killed it before the Open and then got back in right there, but this move should have never been touched. Definitely not in London. It should not have been touched. And then once I got done with all of my appointments this morning, I should not have tried to trade in this. This money was enough. I didn't need to try to make any more. And I was a little bummed that I missed that. Same thing happened almost every day this week. When we opened here and we started trading lower, I was like, well, it could come back against me. I better move my stop to break even immediately. Yesterday was a rough day. It was a rough trading day. It was hard to decide which direction it was going, and it chewed up my P&L. But there was one day where we just fell out of bed. I think it was this one here. Opening candle here, we went up. We got beneath it here. Came back up again once, twice. It wasn't a wonderful read, but there's one thing I've been noticing. When we're having a consolidation like this and we pull away and like that, if you jump in right there at that fair value gap and you put your your stop above that high, you might lose $50 right there. But if you try to get in down here, you're going to lose it maybe more to get above that high or to get above this fair value gap. So why not short the high of the consolidation? If you're thinking we're going lower, why not short the high of the consolidation rather than trying to go short at the bottom of the consolidation? I did that today, and I got smoked, but it was worth it. It was a cheap trade. Anytime there's a consolidation, I'll just show you a couple of them here. Like right here, good flat line. There's a chance that we could come out of this consolidation and rip down here and take out some of these lows. So why not go short at the top of that sucker? We didn't take very much of the lows. We took that one. And then there's this one right here, all the way across. This thing does not have to go to that high. It's a Friday. It could absolutely rip lower. Rather than waiting for a fair value gap to the downside to try to get in on this move, short the highs. Worst case scenario, you only have to put on a few points risk because you'll know when you're wrong right away. As soon as it pops above those highs, then you know you're wrong. And when it's not taking the lows, you'll know you're wrong. But in this area here, short that high. We've been going up all day. Why not short it? It's a cheap trade. Very, very cheap trade. We've taken a 4 hour. There's a high likelihood that we pull back. Maybe we didn't this time. It's okay. You lost a trade, but you lost you could keep a very small stop loss here. 10, $20. No big deal. If we have a lot of fruit up top and we're in a consolidation like this, you don't want to wait for confirmation like I did. We don't want to wait till we get above this high to see if we're going higher. We want to buy at the lows to see if we're going higher. Worst case scenario, if you get in here at a low, like when we poke that low and you jump in right there, worst case scenario, we're going to get below that wick and you're stopped out, but your stop loss is only 20, $30. If you get in here, you got to put your stop loss all the way the hell down here. You might lose $100 or more, 200. So on a bullish day like that, when you see a pullback like that, jump in there. Even if you're wrong, jump in there. You can keep your stop losses very small that way. All right, I think that's it. I do want to show you a little bit of Bitcoin. Bitcoin really got me yesterday. The whole fear and greed thing really ripped me a new one on Bitcoin yesterday. And it was actually the equities traded in unison with Bitcoin today. When ES took its low, that 4 hour low down here, I have to go to extended to show you. Oh, it was a monthly low. When ES took its monthly low right here, it started going back up. And Bitcoin did the exact same thing while leaving a monthly low just a few ticks away. So ES was kind of the driver for Bitcoin somehow. I don't know how that even works, but it was. And its price action was very similar after that. A little bit more rapid move up, but we had pullbacks all at the same time, and then another push up and another pullback. It was just a really nice move up. And because I'm going to show you on the higher time frame, because it doesn't show up on that one. This monthly low was right here. We were just that far away. Just a few ticks, really. For Bitcoin, that's nothing. I was convinced we were taking that monthly low, and I did not want to get in on this long move until it came back down to it. And I let the majority of this move go before I ever even got involved. I did get short here and made some money on the way down, but this was the big move, and I missed. I was not confident in taking it because we left that freaking monthly low. Could you believe that? So this monthly low, I guess, was not good enough for me. We needed to take that one too. But this one was all it wanted. It wanted to leave that one for some reason. Maybe we revisit it at another time because we have relative equal lows on the monthly chart now. But maybe we don't. Maybe this is just a pullback and we address that one on Monday next week sometime. Don't know. But I bet you the next time it's taken again, we're going to have another one of these run ups. Or maybe we leave it down there forever. But either way, ES I talked myself out of, and then in this one here I talked myself out of. I actually took the trade over here, but killed it early. So was not a stellar week for me. I missed a lot of big moves because I was letting fear guide my trading. And I've just got to I'm going to make you this promise right now. Okay? Promise to you, promise to myself. I know these chart levels. I'm pretty accurate about them with discovering where the market is most likely to reverse. I wait for that reversal to happen, and then I get in the trade, and then I start letting my emotions dictate when I get out of the trade. It may be a fast pullback on a candle. Oh, I better kill it, or something like that. My emotions should not be factoring in. What should be factoring in is the next 4-hour swing high. That's the way the market moves. You consider those 4-hour candles like a range. It goes down for 4 hours, and then it goes back up for 4 hours. Just think of it like that. And that's the range. This is the high of the range. This is the low of the range. And these are other 4 hours that were left untouched. So once we get here, if we don't have a reversal pattern, keep holding. We get here, we don't reverse, keep holding until we get to a level where it does put up a reversal pattern. And then you kill your trade. Okay? And so that's my promise to you. Next week is going to be much more profitable because I am not going to let my emotions control when I enter and exit a trade. I see this setup. I get in. I put my stop down here or below the breaker, whether it's $100, $200, it doesn't matter. And I leave that sucker running. If I lose it, it's okay. I traded my system. It was at a higher time frame low. I traded my system. Okay? That's my promise to you. I have not been doing that this week, and I've been taking losses, $50 at a time until I hit my DLL. $50 at a time again until I hit my DLL, because my DLL's very small. Why is that? Because I'm afraid of losing money. I just got all these accounts funded. I'm doing trade copying on 5 accounts. I can't lose money. If I lose $200 across 5 accounts, that's $1,000. I can't be losing that money. So my focus was on not losing money rather than making money. And when my focus is on not losing money, guess what happens? I lose money over and over and over again. Maybe you get in a trade and you move your stop loss to break even immediately, only to see it come down, stop you out, and then go your direction. Now, you're not just scared of losing money, but you're mad about all the money you didn't make. Completely emotionally trading, out of control. Your DLL is going to get hit that day. I can almost guarantee it. So really pay attention to your emotions during that time. Am I wanting to move my stop? If you do, practice opposite action. If your emotions are saying, "Oh, you need to preserve this profit. You need to move your stop." Do the opposite. don't move your stop. If your emotions are telling you when it gets to this 4 hour level, oh, we could go to that 4 hour level. So I think I should add here or something like that. Do the opposite. Do not add there. Maybe even take the position off there and wait for a pullback. Because usually when we take a 4 hour level, and that's what this one is, that blue line, it's a 4 hour level, we usually get a little bit of a pullback. So if you got in down here somewhere, kill it there. Wait for a pullback. We got a higher low, we pull away with a fair value gap, jump back in. Aim for the next 4 hour high. That's all you got to do. And that's not what I've been doing. I've been getting in here. It goes against me. I see a big red candle my way. I kill it, and it turns into a doji and finishes green. So I've been definitely letting fear run my trading this week. Last week it didn't. I did great last week. But this week, for some reason, I went right back into that fear cycle. And I've listened to a lot of traders, read a lot about trader journeys, and it's very, very common amongst all of us. So if you're having that problem, guard against it by taking that opposite action. I think it'll help. I hope everybody had a good day today. You could pretty much have just closed your eyes and bought. As long as you had a big enough stop loss, you were going to make money. And I hope everybody had a good day, good week. Hope everybody has a good weekend. I am going to ask you one thing. If you, the way YouTube works, I want to talk to you about the way YouTube works. I think the information I put out on here is good information. These reversal patterns are beautiful. This, the 1 minute candle reversal, or playing off of it, the line in the sand, if you will. I think that's really good information that other traders could benefit from. But my channel is very small. It hasn't grown very much at all. It has grown quite a bit. I mean, I started with just family as subscribers. I think I had 6 in the beginning. And so it has grown, definitely. But the way the channel grows, as far as who gets referred a video or whatever, is the amount of likes it has and the amount of comments it has. If people are commenting on the videos, well, then YouTube somehow, their algorithm will start referring that out to other people. Not exactly sure how it all works, but I know that people that are big into YouTube, they always ask people to leave a comment. And I do that a lot. I ask people to leave how much money they made, or if they had a successful day, tell me their success story or whatever in the comments. But I'm not getting any comments. Only people that ever comment on my video, very rarely do I get a subscriber. It's usually just my sister or somebody that comments. So even if you just put in there, hey, or whatever, commenting, if you watch the video, you like it or whatever, dropping a comment, hitting the like button really goes a long way with the YouTube algorithm, because I want more people to see this. I think struggling traders could really benefit from this information. I know when I was starting out and I didn't have any clue what I was doing, finding something like this would have shortened my journey tenfold, I believe, because this is something that happens every single day. Once you get a good system, then it's all emotional control. That's all you're working on from that point forward. Once you have a good setup that you can work off of, maybe it doesn't even show up every day. Maybe it only shows up 3 or 4 days a week. Once you have that, then it's just all about getting the proper planning, your stop loss size, how much size am I going to put on, and it becomes more the nuts and bolts of actually becoming a trader, controlling those emotions, learning to work with your emotions. You can't really control them. You're going to get scared sometimes. I'm scared of losing this money. Take a deep breath. Maybe you leave the market. You don't trade that day. Or you say, I'm going to practice the opposite action. I'm just going to let the money go if that's what's going to happen. If you get your account depleted so far that you cannot take a trade without being in fear, I've been there, and believe it or not, it's better to start over than live in that state of fear for 2 or 3 weeks trying to dig that thing out of the trenches, because you will start moving your stop loss or putting on some sort of a stop loss that's guaranteed to get hit, and that account's going to get blown. So if you cannot trade without being afraid of losing money, stop trading until you are no longer afraid of losing money. Okay?